Alright, so I'm Austin, and this is our final project for EA.
I'm Leo.
And I'm Daniel.
So, Electronic Arts' business strategy is to produce video games and generate revenue through the sales of video games, microtransactions, and licensing to third-party organizations. One factor that has made EA very successful is their ability to secure exclusive rights to different types of games. EA has exclusivity rights to almost all sports games, such as the NFL, NHL, FIFA, and UFC. From the FIFA 2019 game alone, EA has made 28% of their revenue from their microtransaction features. They also have exclusive rights to the Star Wars franchise, which has been a major revenue source for EA. One key risk associated with EA's business strategy is with the popularity of gaming skyrocketing. Companies that they get exclusive rights from want significantly more money from EA for the rights. If EA can no longer afford these exclusivity rights, they will face stiff competition from other gaming companies making their own versions of the NFL and FIFA games. Another gaming company could even buy exclusivity rights from FIFA, and then EA would not be able to make another FIFA game, and they would lose up to 28% of their revenue instantly. And then for the reconciliation table, most of it reconciled between the eval data that you gave us and EA's 10K, except for they did not have a cost of goods sold account, and they did not have a SG&A expense or anything that I could find like it.
Moving on to question 4. This is where we identified and evaluated some of their key accounting policies. They have multiple streams of revenue. This mainly comes from subscriptions, licensing, and distributions of physical and digital copies of the games. So subscriptions comes from the actual online game itself. It can also come from the platform that the game is being sold to. Licensing, the same thing, where they can license their game throughout different selling platforms such as Origin and such as like the Steam store and then also distribution of physical and digital copies of the games. This is where most of their revenue comes from. One important thing to understand is that revenue is not counted until the consumer has started the actual download process. This has been a big thing recently when a lot of games nowadays can be pre-ordered, which means even before the game comes out, you can buy the game at full price, and then if you want to buy like DLCs, you can also do that. But then a lot of consumers are starting to like change their mind before the game actually comes out, and so then they want the refund. And then to show an accurate reflection of their revenue, EA will actually not count the revenue until the game has already been downloaded. Deferred net revenue is considered material in this case due to it being a large portion of the revenue. This comes from the prepaid kind of like early like buying of the game. So basically that net revenue is not accounted for until later on. Service revenue is recognized as a service is being performed, and so say they're working on a really big project, it takes multiple years, they're going to take into account, if they're done 40% of the project in a year, they're going to take into account 40% of what would be the overall revenue of that product. Question 5, this is looking at the economic asset and liabilities of EA's that is missing from the balance sheet. And then, does it differ significantly from its true economic value? And one very important thing to look at is the foreign currency reserves now. And so basically foreign currency reserves, EA has operations and consumer bases worldwide, so there are many different currencies being used, from like pesos to yen to whatever you can think of. There's a consumer base worldwide that's not just the US dollar. And so exchange rates between currencies are changing consistently, and the reserves can change greatly if a drastic change in the value of a currency occurs. Let's say that the yen loses almost all of its value, and and there's a lot of the consumer base in China decides to buy, a certain game. It may not mean a whole lot to the value of the dollar. Therefore, even though a lot of games were bought, the actual revenue number won't account for the actual success of what happened. And then, do you think EA's reported earnings are a good reflection of the underlying economic performance? I'd say if you look at it at a snapshot, it is a good reflection, with their whole accounting policies. With their deferred net revenue, they're not accounting revenue until the game's actually started to download. I feel like it's a good reflection. But if we're looking towards the future, I would say that EA is kind of boosting their own numbers, so they could be underperforming. They don't really value the foreign currency reserves as much. They value always to the US dollar, not necessarily looking at what other currency markets are doing. And then they have a very aggressive revenue focus that are driving consumers away. It says it in their 10K, they're all about trying to gain as much revenue as possible, and then to some extent that's also driving consumers away from them.
All right. So for the ratio and cash flow analysis, we used eval to eval's where we got all these numbers from, and the first thing we calculated or looked at was EA's return on common shareholders' equity, which came out to be 0.205. That means that EA has a ROE ratio of 20.05%, which is pretty good and indicates that EA is doing a good job in using its assets to create profits. So the next thing we got from eval was the return on net operating assets, leverage and spread ratios, using the advanced DuPont model. And EA's RNOA was 0.178, its leverage was 0.2, and its spread ratio was 0.135. And we calculated those same ratios for Activision Blizzard, which is a company we are comparing EA to. And for Activision Blizzard, its RNOA was 0.133, its leverage ratio was 0.339, and its spread was 0.122. So just to kind of explain these numbers a little bit further, the return on net operating assets ratio measures how good of a job a company does in generating revenue from its assets. And going back to this, we see that up here, we see that EA's RNOA is higher than Activision's, which means that they are doing a better job in generating revenue from its assets, and it seems like EA is operating more efficiently. However, some of that is also due to cost-cutting practices that EA does, like, for example, they fire video game developers after a new video game is launched to cut costs, and that's probably part of the reason why this ratio is higher. The leverage ratio measures how much of a company's capital comes from debt, and again, going back to these numbers, we see that Activision's leverage ratio is much higher than EA's, which means they are using more debt to finance their operating activities, whereas it seems like EA has more cash available to finance their operating activities. And debt financing almost always involves fixed payments to a creditor or creditors, and that puts a firm at higher risk of losing control or giving up control of the firm. So we conclude that Activision in this case is more likely to give up control of their firm. And lastly, the spread ratio measures the difference between the return on net operating assets and net borrowing costs. And again, going back, those numbers are not too different, they're pretty similar, but we can see that Activision's spread ratio is a little lower than EA's, and that is probably, or that is because EA's RNOA exceeds its net borrowing costs by a larger amount than Activision's, and essentially that means that EA's common equity holders get a more proportionate share of net operating income. Next thing we calculated or got from eval was the net profit margin and net operating asset turnover, and we can see up here for EA the net profit margin is 0.203, and for Activision Blizzard the net profit margin is 0.247, and the net operating asset turnover for EA is 0.831, and for Activision Blizzard it's 0.537. So Activision's net profit margin is higher than EA's with 24.7% compared to 20.3%. And that is because Activision seems to be more efficient in generating income from sales. However, Activision's net operating asset turnover ratio is much lower than EA's with 53.7% compared to 83.1%. And that is most likely because EA is just being much more efficient in generating revenue from its assets, so it's operating more efficiently. Both of these ratios can be indicators of performance, and both of these ratios factor into RNOA, so return on net operating assets. So an increase in either of those ratios will increase RNOA, and although Activision's net profit margin is higher than EA's, EA's operating asset turnover, right here, is much higher than Activision's, and that is the reason why EA's return on net operating assets is still higher than Activision's. Next thing we got from eval was free cash flow to common equity and free cash flow to investors. So EA's free cash flow to common equity was 657,000, and its free cash flow to investors was 697,498. And the free cash flow to common equity is a measure of how much cash is available to a company's equity shareholders after all expenses, reinvestments, and debts are paid. And it is computed by subtracting the increase in common equity from net income, and it essentially measures equity capital usage. And the free cash flow to investors, that represents how much cash a company generates after cash outflows to support operations and to maintain assets. And that one is computed by subtracting the increase in net operating assets from net operating income, and it essentially represents the cash that is available to all investors in the company.
All right, so moving on to our final question, looking at the cash flows from its operating activities, it says to identify the main ways in which EA deployed these cash flows. And so if we looked at both financing and investing activities, the biggest deployment of cash flows from investing is the cash from investing. And so if you look at that, that's kind of like short-term investing, investing in stocks, investing in different resources that can quickly generate you cash in a very quick time period. And so they use approximately $144 million of cash into investing. And then if we look at financing activities, with repurchasing and retiring stock, they surprisingly bought back approximately 5% of their stock, around $657 million worth of stock. This could indicate that maybe they're taking a little bit more cautious of approach if they expect, for instance, a recession or something is coming. We have a booming economy right now, and they're expecting, hey, it might drop off here in the next year or two. They want to play it a little bit more safe, and so they're going to rebuy it now before all their stocks kind of tank. And that's EA.